Dear friends, in the previous session we started discussion on dividend policy, in that different what is dividend policy and dividend decisions, and also we discussed about different types of dividend policy. In this session we concentrate on what are the factors influencing dividend decisions. A company needs to take a decision with respect to which type of dividend policy has to be followed, and whatever be the different types of type of dividend policy followed by the company, payment of dividend by a company is influenced by many factors. Which are those factors? That is what we will discuss now first. Certainly, as I mentioned in the previous session, dividend payment primarily dependent on profit made by the company. So, the profitability is the most important factor which influence dividend decisions. Whether dividend has to be paid or not, for that the first and foremost criteria is profitability or profit made by the company, and it is not just profit, it is profit after all appropriations, after making all payments, what is left out for the shareholders. So, that is the foremost factor which influence the dividend decision. So, companies with higher profits are more likely to pay dividend, since they have enough retained earnings to fund both dividends as well as funds available for reinvestment. However, companies prefer to retain money if they have investment opportunities, and if they need money for working capital. For that, such kind of companies will retain a major portion of the profit. So, how much dividend is paid is mainly dependent on profitability. It is not just dependent on profitability. If at all profit is there also, again it depends on the investment opportunity available to the company. So, that is one important factor which influences dividend decisions. In one of the previous sessions I clearly mentioned, if dividend is not paid also, if the profit amount is retained and reinvested, equity shareholders will agree with that, with the expectation of more return in the future, as the money which is reinvested will also generate profit. So, with that expectation, equity shareholders will agree with not paying dividend or paying less dividend and retaining major portion of the profit for reinvestment. Next, another factor which influence dividend decision is cash flow position of the company. A company which if the company has regular constant flow of cash, then much amount need not be retained for working capital purposes. Working capital is required for the money required for running the day to day business. If regular flow of cash is there, much amount is not needed to be retained for working capital purposes. So, cash flow is more critical than accounting profits. So, in dividend decisions, so a company may report profits, but lack sufficient cash to pay dividends due to high working capital needs or debt obligations. So, if regular flow of money is there, in such cases that money which flows on a regular basis can be used for working capital. If that is not there, then such kind of companies needs to retain more money for meeting the debt obligations that means repayment of debt or payment of interest as well as for working capital. Then another factor which influence dividend decision is the growth opportunities of the company. If the company is already matured enough, grown enough, there is no growth opportunity, there is no not much further growth opportunities. Such kind of companies will distribute liberally as in the form of dividend. But if growth opportunities are there, investment opportunities are available, then they might require more money for reinvestment. That means companies with high growth companies, they need more money, and they retain major portion of the profit and less amount of will be distributed in the form of dividend. So growth opportunity available for a company determines the whether dividend needs to be paid or not. Then tax considerations, tax treatment of dividends versus capital gains affects dividend policy. Usually dividend, if payment is made in the form of dividend, it attracts more tax than capital appreciation. That means shareholders needs to pay capital gain tax when they sell the shares. Suppose if somebody purchase the shares of a company for 10 rupees, and after some period when they sell, if the market value of the share is 1000 rupees, there is capital appreciation. So that is called a capital gain. So when they sell the shares and if they get appreciation, it amounts for capital gain tax. So usually this capital gain tax is lesser than the income tax. So tax considerations also can affect the dividend decisions. Then comes legal and regulatory constraints. Laws in some jurisdictions restrict dividend payments to prevent companies from paying out more than they can afford. Example, paying out more than accumulated profits, restrictions will be there. So that needs to be considered. Then companies may face restrictions on dividend payments if they are in debt. If the company is already in debt, then there may be restrictions with respect to payment of dividend. Restrictions may be imposed after all debt obligations needs to be paid off, then only dividend can be paid. So like such kind of legal restrictions are there, means that is another factor which affects the dividend decisions. Debt covenants, that is lenders may place restrictions. Those who have given loan to the company may place restrictions on a company's ability to pay dividends, especially if the company has outstanding debt. So it is similar to the previous point. So at the time of taking loan, huge amount, if the company take loan, then there may be a clause in the loan agreement. The lender, the money lender may put a clause that since this much of obligation is there, first a preference should be given for repayment of interest as well as principal amount, and if such kind of restrictions are there in the agreement, then that affects the payment of dividend. For example, a company may be required to maintain a certain level of liquidity or retain a percentage of profits to ensure it can meet its debt obligations. So in such cases, they have to maintain debt equity, they have to maintain a liquidity ratio, about current ratio. Current ratio, ideal current ratio is 2:1 for a company. That means for every single rupee of liability, current liability, there should be 2 rupees worth the current asset should be there. That is the ideal ratio. Sometimes there may be restrictions with respect to maintaining the liquidity. If loan repayment is there, interest has to be paid. In such cases, there can be restrictions that minimum this much of balance to be maintained in the business in order to ensure liquidity, soundness of the financial soundness of the company. Company may be liable to maintain a minimum amount of balance in the company. So, in such cases, if the in order to maintain the liquidity, money needs to be retained in the business, means sufficient funds may not be available for payment of dividend. So, that is another factor which influence the dividend decisions. Then another important factor is expectation of shareholders, because a number of shareholders will be there and different shareholders will have different expectations. Some people invested in especially retired people, they expect minimum income, minimum return, minimum periodical return in the form of dividend. So such kind of people, if they don't get dividend, they will not be happy, because they expect regular return, while others, that is other type of people like growth oriented people, growth oriented investors, they will be aiming for growth, that is capital appreciation. Instead of getting dividend, they may prefer if this dividend also is reinvested, and if the public knows that the company has made profitable investment, and from that investment the company is expected to make huge profit in the future. In such cases, the company's market value of shares will go up, thereby the investors will get capital appreciation. So, growth oriented investors prefer capital appreciation, that is increase in the value of market value of shares. So, they may not require regular income, regular return in the form of dividend. So, they prefer reinvestment of this profit instead of distributing in the form of dividend. They prefer the company to reinvest the profit, and thereby they can expect growth and capital appreciation, and in the long run they will get more benefit. So, but usually a company should consider the diverse interest of shareholders. So, there will be a mix of people, some of them may be expecting return, some of them may not be expecting return in the form of dividend in the short run. So, but in order to maintain a balance between the expectations of different shareholders, companies usually pay a minimum amount of dividend every year, and major portion of profit will be retained for reinvestment. That is the thing which is practiced in reality. Then another aspect, another factor which influence the dividend decision is market conditions and economic environment prevailing. Of course, in recessionary period, if the market is bearish, market is down, economy is down, then companies may reduce or suspend dividends to conserve cash. So, maintain liquidity and manage risk. So, during the time of depression or recession, companies prefer to maintain more money, because money is during the time of depression or recession, the business may be down for some of the industries. So, such kind of companies, the cash flow expectation in the future will be less because of recessionary situation in the economy. So, they need more money to meet the working capital requirement. So, in such cases, if the market condition is recessionary period or market economy is uncertain, so in such cases dividend payment will be less, or companies may suspend dividend payment in order to retain more money in the business. Then industry norms can be another factor, that is some industries, particularly utility or consumer staples, tend to have high and stable dividend payout reason reason is they expect steady cash flow. They will have this consumer goods and consumer goods and utility products. See those who deal with such kind of goods, there will be regular flow of goods, regular sale will be there, and thereby regular cash inflow will be there. They need not have to maintain much profit for the purpose of maintaining liquidity, as they have regular cash flows. So such kind of companies retains less and pay more dividend, whereas technology based companies, tech industries, they need to have more money to be retained for working capital purposes, for reinvestment, because technology changes. To adapt to the new technologies or to develop new technologies, they need to invest money they need to invest money. So thereby they requires more funds, retained earnings, and such kind of tech companies usually pay less dividend. So with this, these are the major factors which affects the dividend decisions. In that, the first thing is profitability, then cash flow position of the company, growth opportunities available to the company, then tax considerations, then legal and regulatory constraints needs to be considered, then the debt covenants, the agreement in the in case of debt covenants, shareholders expectations. Shareholders will have different expectations, and I already mentioned that in order to maintain a balance among the expectations of the shareholders, a minimum amount will be paid as dividend, and then based on the condition of the company, based on the profitability and other factors, if the actual payment of dividend varies. Then market conditions and economic environment prevailing affects the dividend decisions. Then industry norms, in those industries having regular cash flow, they can pay more dividend, as they need not have to maintain much retained earnings, whereas tech based companies, they need to maintain more cash, as they need to maintain liquidity. So such kind of companies retain the major portion of the profit, and a small percentage only will be distributed in the form of dividends. So these are the major factors influences dividend policy of a company. Hope it is clear to you. So with this we will end this session, and in the next session we will discuss on the theories of dividend policy. Thank you.